This hearing will come to order. Last Congress, this committee held 2 hearings examining the digital currency ecosystem. In those hearings, we heard about some of the developments that have occurred within the digital currency marketplace since the creation of Bitcoin in 2008, the potential benefits of digital currencies, and the concerns about value stability, fraud, and illicit uses, market manipulation, and privacy. Since then, Facebook announced its intentions to launch a blockchain-based payment system and digital currency, Libra, that will be governed by an association comprised of up to 100 financial and non-financial members, including Facebook's digital wallet service, Calibra. Facebook's Libra project has generated renewed interest in digital currencies and blockchain generally, including how they interact with U.S. and international regulatory frameworks, the potential benefits and challenges they pose, and concerns around issues like anti-money laundering and counterterrorism efforts, including data privacy, consumer protections, commerce, and monetary policy. A few weeks ago, the head of Calibra, David Marcus, joined the committee to provide an update on Facebook's proposed digital consumer protections, commerce, and monetary, including that there are a number of regulators globally that are currently engaged on the Facebook project, including the Federal Reserve, FSOC, FinCEN, Financial Conduct Authority, and the G7, and more. Calibra and the Libra Association will have the highest standards when it comes to data privacy, and no financial data or account data that is actually collected in Calibra will be shared with Facebook. And that the Libra Association will be headquartered in Geneva, Switzerland, but will still register with FinCEN and have oversight from U.S. regulators. Though while Libra may have begun this conversation, the blockchain and cryptocurrency system is diverse. It seems to me that these technologies and other digital innovations are inevitable. They could be beneficial, and I believe the U.S. should lead in their development. That can't happen without clear rules of the road. As the U.S. develops a more comprehensive regulatory approach, care must be taken in determining what gaps may be present in the existing framework. In mid-July, Treasury Secretary Mnuchin said, "To be clear, the U.S. welcomes responsible innovation, including new technologies that may improve the efficiency of the financial system and expand access to financial services. That being said, with respect to Facebook's Libra and other developments in cryptocurrencies, our overriding goal is to maintain the integrity of our financial system and protect it from abuse." He also noted that Treasury has serious concerns regarding the growing misuse of digital currencies by money launderers, terrorist financiers, and other bad players. As digital currency efforts move forward, I'm particularly interested in better understanding how these technologies may impact individuals' ability to exercise control over their data, including the right to receive information about and access their data, correct inaccuracies, and delete their data. During this hearing, I look forward to hearing more about how the market for digital currencies has grown and evolved over the last decade, different types of digital currencies in the marketplace, including their differences with Facebook's proposed digital currency, how other countries are approaching the regulation of digital currencies and blockchain technology, and what we might learn from their successes and failures, potential gaps in existing regulatory frameworks, whether distributive ledger technology can help to facilitate meaningful privacy for individuals' data, and approaches Congress should consider in developing a comprehensive regulatory regime for digital currencies, including ensuring individuals have real control over their data. With the appropriate balance of regulation, digital currencies and their innovations and their innovative underlying technology could provide meaningful benefits. And I look forward to learning more about the ecosystem during this hearing. Senator Brown.
Thank you, Chairman Crapo, and welcome to our 3 witnesses. Thank you all for joining us, some of you more than once. Thank you. This committee hearing earlier this month, many of us in both parties, as you could hear from the chair, voiced concerns, serious concerns about Facebook's plan to run its own currency out of a Swiss bank account. By and large, we mostly heard deflections and dodging, exactly what we mean when we say Facebook doesn't understand accountability. Facebook has proven over and over through scandal after scandal that it cannot be trusted. But they just don't care. They move fast, they break things, minor things like our political discourse and journalism and relationships and privacy. Now they want to break our currency and payment systems, hiding behind the phrase innovation. They want to innovate Americans right out of their hard-earned paychecks. Look around at what happens when big corporations say they want to innovate. Before they blew up the economy in 2008, bankers were pitching an innovative new product called subprime mortgages. Just like Facebook, which claims its new currency will help the unbanked and the underbanked, a bit of an afterthought, I think, as they were selling it. These mortgages are supposed to help people who never had access to credit achieve the American dream of home ownership. In reality, these mortgages ripped off millions of families who ended up losing their homes. They wrecked the economy. They made the staggering inequality in this country even worse. The only innovative thing about the financial crisis was how the banks managed to stick everyone else with the bill, not exactly the kind of innovation most of us were hoping for. So I'm all for innovation, especially if that innovation delivers on its promises of improving people's lives. But big tech companies, Wall Street banks, are hiding behind innovation as an excuse to take over important public services we all benefit from and should all have a say in. There are some things, our currency, our payment system, the protection of our savings accounts, that everyone in the country has a stake in. We shouldn't be handing those kinds of public resources over to wealthy special interests so they can squeeze more profits out of ordinary Americans. Think how hard it is to get quality service from Comcast, to know how your privacy was invaded by Facebook, or to know how much of your personal data was leaked by Equifax, and we just learned in the last 24 hours, Capital One, and who's next? We don't know. So we should be a little suspicious when someone tells us that only big corporations can be trusted to provide critical public services. I recently moved into a new office. It was John Glenn's office. When he served obviously served Ohio in the Senate. He and I moved there because he and Annie are longtime friends. We've known each other for 30 years. John Glenn spoke at my Eagle Scout dinner in Mansfield, Ohio 50 years ago. But I moved into that office because primarily he was an innovator. He was the first American to orbit the Earth, as we know, as part of the Mercury project, which would be followed by the Gemini and Apollo missions that would eventually put Americans on the moon. Many of us who are old enough joined in the celebrations of the 50th anniversary, at least some of us on this podium were old enough, joined in the 50th anniversary. We all did that, but remember the day 50 years ago, just this month. None of the astronauts did it alone. It took the hard work of thousands of innovating scientists and engineers, most of them unknown, people like famed mathematician Katherine Johnson or immigrants like engineer Miguel Hernandez. These Americans didn't do it for profit. They did it to serve their country, and their successes were shared by every American who saw USA emblazoned on the side of Apollo 11. It's a reminder that some infrastructure works better as a public good, and we shouldn't let big banks or big tech get their hands on those public goods. The Federal Reserve and other watchdogs need to continue to be leaders in banking innovation. And if we don't move quickly to improve important infrastructure, not just roads and bridges and highways and water sewer systems, but our payment system too, if we don't move quickly to improve it, we'll end up with big corporations that have broken our trust again and again and again, and that doesn't make any sense. I look forward to hearing from our witnesses today about which of these technologies might actually help regular Americans. Thanks.
Thank you, Senator Brown. Today's witnesses are Mr. Jeremy Allaire, co-founder, chairman, and CEO of Circle on behalf of the Blockchain Association, Dr. Rebecca M. Nelson, a specialist in international trade and finance at the Congressional Research Service, and Professor Mirza Baradaran, Professor of Law at the University of California, Irving School of Law. I'd like to assure each of you your written testimony has been entered into the record. We encourage you to try to follow our 5-minute rule by watching that clock in front of you so that we have time to ask you our questions. And with that, let's begin in the order in which I introduced you. Mr. Allaire.
Thank you, Chairman Crapo, Ranking Member Brown, and members of the committee. It is my pleasure to appear before you today to testify about the promise of digital assets and blockchain technology. I've spent the past 25 years building internet technology platforms and companies in the United States, serving millions of businesses and hundreds of millions of consumers. In 2013, I co-founded Circle, a global digital currency company seeking to make it much easier for people and businesses everywhere to create and exchange value with the same ease that we create and share information and content on the internet. I'd like to start by touching on some of the challenges I see in the global financial system today. Billions of people lack basic access to financial services. Those who do have access face a system with exorbitant fees and excessive risk. Our banking system is riddled with money laundering and crime, with annual illicit proceeds laundered through our financial system exceeding $2 trillion, and with 99% of laundering going undetected. Our financial system is also overwhelmed with privacy violations and data breaches. Cyber criminals and hostile nations continue to take aim at our financial infrastructure. The costs of this are spiraling, and the situation seems to be getting worse. Access to capital for small businesses is extremely limited, with capital markets reserved for only the largest companies and those with access to venture capital, and very few people have a chance to even invest in these startup companies. There absolutely can be a better future ahead, one built on digital assets and blockchains. These technologies represent one of the most significant innovations in modern history. I believe that blockchains and digital assets will be viewed as more impactful than the rise of joint stock corporations, double-entry bookkeeping, and modern banking. In the coming decade, we'll see a series of profound changes. Digital currencies will proliferate and become usable by billions of people on mobile devices. Payments will become a commodity-free service on the internet. A new set of internet-based global capital markets built on digital assets will emerge, opening up capital markets for businesses and investors everywhere, scaling from today's thousands of companies to a world where every person and business can directly access global capital markets with the same ease that they access e-commerce marketplaces. Commerce relationships will increasingly be running on blockchains, providing a commerce environment with greater security, efficiency, transparency, and enforceability. And new decentralized forms of digital identity will become available, allowing for much safer use of digital services, and which will radically improve our privacy while more effectively thwarting financial crime. As a new fundamental layer of internet infrastructure, blockchains will transform the global economic system. With respect to the policy and regulatory issues facing the world with the growth in digital assets, there are significant issues at stake. In the United States, regulatory uncertainty and the application of laws that do not contemplate digital assets has led to the loss of significant opportunity. The Securities and Exchange Commission, for example, is forced to apply federal laws written in the 20th century to technologies created in the 21st. This has had a material impact on the competitiveness of U.S. companies, with Asian-based companies beginning to dominate the market and is backward rather than forward-looking. Congress should consider new laws that protect consumers while not causing companies to fixate on nearly century-old definitions. The result of the uncertain and restrictive regulatory environment has led many digital asset projects and companies to domicile outside of the United States and to block U.S. persons and businesses from accessing products and technologies. In Circle's case, we have received a license under Bermuda's Forward-Looking Digital Asset Business Act, which provides a comprehensive regulatory framework for companies in the industry, and we are in the process of moving our international-facing products and services out of the United States. It is vital that we allow innovators room to grow in the United States. Congress should adopt national policies that define and establish digital assets as a new asset class, including appropriate rules and exemptions. Without a national policy framework for digital assets, I'm concerned that the United States will not be the world leader in this critical new technology, that it will continue to fall behind, and that it will not fully reap the benefits of economic transformation that digital assets will bring. Thank you for your increased interest and attention to this significant area of opportunity, and I look forward to hearing your questions and opinions.
Thank you, Mr. Allaire. Dr. Nelson.
Good morning, Chairman Crapo, Ranking Member Brown, and members of the committee. Thank you for inviting the Congressional Research Service to testify on examining regulatory frameworks for digital currencies and blockchain. My testimony focuses on the international landscape of digital currencies. I will summarize my statement with these brief remarks. In 2009, Bitcoin was launched as the first cryptocurrency. Cryptocurrencies are digital representations of value. They are generally administered using distributed ledger technology and have no status as legal tender. Cryptocurrencies strive to make payments cheaper and faster. Today, more than 2,200 cryptocurrencies are in circulation. In terms of market size, however, cryptocurrencies are a small, niche market. Some central banks and large multinational corporations are looking to take cryptocurrencies into the mainstream. If these initiatives move forward, there could be numerous policy implications for the United States, including for its financial stability, the role of the U.S. dollar, consumer protections, money laundering, privacy considerations, and sanctions policy. I will make 3 points today. First, the patchwork of cryptocurrency regulations around the world. Second, the growing interest of central banks in cryptocurrencies. And third, Facebook is a potential game changer for the market. So the first point is the patchwork of cryptocurrency regulations emerging around the world. Cryptocurrencies are international in nature, but they are regulated by governments at the national level. There are more than 190 countries in the world, and they are taking different approaches to the regulatory issues presented by cryptocurrencies. For example, cryptocurrency regulations have focused on permitted uses, consumer protections, securities regulations, licensing and reporting requirements, anti-money laundering regulations, and tax treatment. Broadly speaking, government approaches fall across the spectrum. At one end of the spectrum, some countries, such as Malta, Singapore, and Switzerland, are striving to become cryptocurrency hubs. They view cryptocurrencies as a potential source of growth, and they actively attract cryptocurrencies with favorable regulation and tax regimes. At the other end of the spectrum, some countries, including China, India, Egypt, and Taiwan, have banned or strongly restricted cryptocurrencies. Their concerns focus on government control of the financial sector, financial stability, and consumer protections. In the middle of the spectrum, some governments are allowing the development of cryptocurrencies while developing regulations to minimize risk. Most major developed economies, including the United States and the United Kingdom, have adopted this approach. Differences in financial regulations across countries can lead to instability, especially if cryptocurrencies are adopted on a larger scale. The second point is that some central banks are exploring the creation of their own cryptocurrencies. Some countries plan to develop cryptocurrencies as a second legal tender. For example, the Marshall Islands is planning to create a cryptocurrency called the Sovereign to raise government revenue. Venezuela launched the Petro, a cryptocurrency backed by oil, as a way to raise money and evade sanctions. Iran and Russia are also reportedly considering cryptocurrencies, at least in part, to avoid sanctions. Other governments are considering making digital versions of their existing fiat currencies directly available to individuals. For example, Sweden's e-krona project strives to reduce its reliance on private payment processing companies. The policy implications of such initiatives for the United States would largely depend on which countries are involved and how the new currencies are structured. The central banks of most major developed countries are refraining from such initiatives at this time. The third point is that Facebook has the potential to be a game changer for cryptocurrencies. In June, Facebook announced its proposal for a new global cryptocurrency, the Libra, to be used by billions of people. The Libra would be backed by a reserve fund of safe assets denominated in a basket of currencies. The Libra Association, the nonprofit to oversee the currency, is headquartered in Switzerland. Many of the details about how the Libra would operate remain uncertain. The Libra has raised a number of questions due to Facebook's lack of experience in the banking sector, the size of Facebook's network, and concerns about Facebook's handling of user data. There are also questions about who would regulate it and how. Earlier this month, the G7 finance ministers and central bank governors agreed that the Libra raises regulatory and systemic concerns, as well as wider policy issues that would need to be addressed before the project is implemented. Mr. Chairman, this concludes my brief remarks. Thank you again for the opportunity to testify, and I look forward to the committee's questions.
Thank you, Dr. Nelson. Professor Baradaran.
Thank you. Chairman Crapo, Ranking Member Brown, and members of the committee, thank you for the opportunity to testify today. In the aftermath of the 2008 financial crisis, many Americans were frustrated with our banking industry that had engaged in reckless risk-taking and predatory practices that harmed their customers. They were frustrated again by government bailouts that seemed to save just the perpetrators of the crisis. Is it any wonder that as so many people lost trust in the system, that they enthusiastically embraced Bitcoin, a new alternative, non-sovereign currency introduced on the heels of the crisis to respond to the very problems of the financial sector, which, as Mr. Allaire wrote, is rigged against average people. I wholeheartedly agree with these concerns. I spent my career trying to bring attention to issues of inequality and exclusion in banking. While I'm glad the cryptocurrency industry aspires to help the unbanked, I do not believe that in the United States, this is the best solution to the problem. The blockchain ledger is a big technological leap forward, but problems of exclusion and financial marginalization in our financial system are not a result of faulty technology, but faulty policy. One stated goal of Bitcoin and digital currencies is to establish an efficient and public payment system available to all. In fact, Congress already established a public payment system, the Federal Reserve. The Fed's explicit charter is to serve the public interest and to increase the integrity, efficiency, and equity of U.S. payments. The Federal Reserve can and should seek to open its payment system to all Americans. Currently, the payment system is only open to banks. Even mobile apps and fintech providers have to go through a bank. But for a host of reasons, banks are not serving low-income and low-profit customers and communities. As a result, 25% of Americans are unbanked or underbanked. These low-income families spend billions of dollars and valuable time paying for checks to be cashed, refilling prepaid debit cards, and paying bills in person. Practically speaking, the most direct path to financial inclusion is by opening the doors to our already established payment system. It can and must be updated, but the system is secure, handles millions of transactions a day, is accepted by all merchants, and is widely understood. The alternative path to financial inclusion through cryptocurrency relies on waiting for entirely new currencies to be developed on new and untested technological platforms, waiting for wholesale adoption and use, and then waiting for technological advances to penetrate banking deserts, all while unbanked populations continue to spend hard-earned wages in fees. And even if technological solutions are right around the corner and we decide that this is the answer to financial inclusion, we would be reserving the highly subsidized and public federal banking system for those with enough means to be banked and relegating the unbanked to the private cryptocurrency markets. This is undemocratic and unfair. The Federal Reserve and this Congress are in the best position to make this possible by offering real-time payments and retail point-of-contact operations, such as a post office checking account. As far as regulating these cryptocurrencies, I ask that Congress and regulators approach these financial products with a healthy bit of caution. It's the innovator's job to imagine a bright and better new world of disruption and change that will benefit everyone. It is a regulator's role to imagine what could go wrong to create system-wide crisis that could hurt everyone. When it comes to regulating finance, an ounce of prevention is much better than $1 trillion bailout. As innovators look forward, regulators and Congress must make sure that we've learned the lessons of recent history. Though no one wants to stifle innovation or to see the U.S. lose its competitive edge, we should remember that much of the deregulation that led to the financial crisis was justified on these very same worries. Just two examples. The derivatives market was deregulated because industry experts promised that innovative and complicated new products hedged risks. Investment banks and regulators relied on very sophisticated mathematical risk models for risk management instead of old and outdated rules. Not wanting to stifle innovation, derivatives were deregulated in 2002, which led to a $600 trillion market that no one was watching too closely. As financial regulators discovered in 2008, the complex risk models had not hedged its risk at all, but had merely placed many of them on books of their counterparties. The entire sector was exposed. The innovation, the math and the technology was not the problem. The problem was the humans. Similar promises and assumptions were made about the new and innovative money markets in 1980s that were also similarly deregulated. Money markets were pegged to the dollar one-to-one, just as Libra and digital fiat currencies are. They promised to be stable and liquid and not susceptible to runs. And they were fine until they broke the buck and threatened a potentially catastrophic run. The Treasury had to step in to guarantee these markets. Cryptocurrencies create new money-like instruments that are tradable and have inherent value. This is not significantly different from derivatives markets, commercial paper paper markets, repo markets, even historic markets in private bank notes. These shadow banking markets were unregulated for too long and created big problems. So far, none of the cryptocurrencies have reached the level of scale where they would present a systemic threat, but if their ambitions are believed, they will. And we have regulators for that should look to the safety and soundness of the financial sector. Technology has and will continue to fundamentally transform finance, but there has yet to be an innovative technology that has eliminated the risks and frauds and crimes that financial regulation is meant to combat, despite many promises to the contrary. Cryptocurrencies are either a store of value, tradable currencies, investments, commodities, or payment system, or some have promised they are all of these things. There's nothing about all of these things being put on the blockchain that makes it any less likely that it could lead to systemic risk, fraud, insider trading, criminal activity, panics, bubbles, etc. If our securities or commodities or banking laws have become outdated or unnecessary, or if Congress believes that they are too cumbersome, then they should be repealed or changed for all applicable parties, not just newcomers. Technology and innovation cannot undermine public policy. Thank you.
Thank you, Professor. I'm going to use my first section of time to talk to you, Mr. Allaire. It's been 10 years now since Bitcoin was first issued, and the digital currency marketplace has evolved and grown. I think one of you said 2,200 currencies right now, cryptocurrencies right now. Given this innovation and their complexity, it can be difficult to understand the differences between products and their benefits and the challenges that are raised for regulatory climate. Mr. Allaire, how can the U.S. develop a more comprehensive approach to digital currency and blockchain regulation while still acknowledging the unique aspects of different projects?
Thank you, Senator. I think your comment is very accurate in that we have seen tremendous development over that period of time. As noted in my testimony, there's over 2,300 different digital assets that are available publicly in some form. In my testimony, I do outline in great detail the kind of different categories of digital assets. It's very easy when one hears about Bitcoin or Libra to sort of assume this is all the same stuff. And so I think one of the very first things for regulators and policymakers is to really distinguish between the different types of digital assets that are emerging. We see, obviously, these kind of non-sovereign digital monies like Bitcoin. There are dozens of others like that have a focus on kind of privacy-preserving, transmission of value. They implicitly have a kind of monetary policy associated with them. And these kind of new commodity monies need to be regulated as we've regulated other commodity monies with appropriate types of financial crimes controls, as we've seen put forward in with FinCEN and FATF guidance. But also there's, I think, new things that happen in this space. The firms that store these assets, these are effectively digital bearer instruments. So not unlike diamonds or gold or some other bearer instrument, but they're digital, which makes them very, very attractive to people who might want to steal them. Hence, so much of there's been so much activity around theft on these kinds of cryptographically secured assets, and so regulations around the custody of digital assets is a really critical need, and something that a number of jurisdictions have actually put forward and built very specific rules around how do we custody these types of digital assets. I think, as I've also talked about, some of the most innovative technology in this field are what I call blockchain platforms. And these are really general purpose infrastructures for record keeping, transaction processing, writing code that executes different types of contracts. And this is, I think, one of the most important breakthroughs that we've seen frankly, in the history of modern computing. And ultimately can lead to things like secure voting, new forms of governance mechanisms within firms, as well as innovations in financial assets. These types of assets, I think, have the broadest applicability and should be encouraged in their development. I think in the same way that we encouraged the rapid development of technical standards that made the commercial internet flourish.
Let me interrupt and ask a further question. As I understand it, when it's been recently that Poloniex, the subsidiary of Circle, transferred its registration to Bermuda and cited, in that process, it was cited that there was regulatory uncertainty in the United States, which was a primary motivating factor. Could you explain that a little better?
Yes, absolutely. I think the really critical issue is that many of these digital assets do not easily fit classifications that we've had in our financial system. We'd like to say, oh, this is like a currency, or this is like a commodity that you'd use or utilize in some way, or this has some feature that maybe makes it look like an investment contract. Many digital assets have features of all three. It's what makes digital assets, I think, very innovative, is that you can construct an asset that simultaneously incentivizes capital, incentivizes customer behavior, provides value in terms of access to goods or services and payments. And that's a breakthrough in how we can develop corporate forms. It's a breakthrough in how we can incentivize and develop businesses and technologies. Unfortunately, in the United States, the guidance that the SEC has given is extremely, let's just say, narrow in terms of what they would deem to not be a security. The vast majority of digital assets, if they were in fact treated as securities, as the Howey test application and the most recent staff guidance provides, effectively would mean that those are not accessible to U.S. persons, because the utility value of the asset would not be possible to function if it's treated as a security. So there's a fundamental mismatch between the regulatory structure and guidance that we have here and the nature of these digital assets. And so markets around the world are adopting these, and not just Bermuda, but Singapore, Switzerland, even jurisdictions like France introducing tailor-purposed definitions of digital assets so that issuers can feel comfortable with their obligations. There's investor protections associated with those and security and the like. But which don't try and jam these into the respective classifications we have today.
So my time's expired, but to be sure I understand your point here, it would be, as a part of our policy approach, you're suggesting we should not regulate this set of innovations as securities.
To the contrary, so I'm sorry, I misunderstood the question. Yes, we should regulate these. I believe we need new definitions of digital assets as a new asset class. And that there are circumstances where there are investor protection considerations, there are trading and market considerations, there are also circumstances that have to do with utility, commodity, and end-user usage, and you have to be able to define these in a way where that can work.
All right, thank you. Senator Brown.
Thank you, Mr. Chairman. Professor Broderick, welcome. Congratulations on your move to Irvine.
Thank you very much.
You seemed like you might be skeptical of Facebook claims of 2 weeks ago in this committee, like the one that it's barging ahead with an innovation that will serve the unbanked and underbanked. Would you, if you can kind of cite some history when innovators, financial service companies, others said that they wanted to bank the unbanked and the underbanked, and what actually happened with those kind of innovative financial services products?
Yeah, this is not the first time we've heard that the main, and as Colibra says, their fundamental mission is to serve the unbanked and underbanked. And I've heard this a lot from the crypto industry over the past decade. We heard access to credit being offered earlier. And one of the ways that was offered is in the subprime crisis. So the idea was we're going to lower underwriting standards, and we're going to do the subprime market, the mortgage-backed securities market, and the CDO market. And one of the main justifications was to provide access to credit, to increase financial inclusion. With the tech companies, some of the fintech companies as well, they usually list that as the prime issue.
Thank you. Mr. Allaire, to address this, I'd like you to. Is there any reason to treat cryptocurrencies and other financial services offered on blockchain to treat them differently than the products that have existed from? I want you to answer, Professor Broderick.
Oh, okay.
He spoke to it a bit, and hear your thoughts on treating them differently from what we've done over the years.
No, I mean, the blockchain is new technology. Absolutely. It's amazing, and maybe we'll all be on it soon. That's all fine, but what we're talking about is the digital assets. I mean, this hearing is about the value created, the assets on the blockchain. And so it's sort of a red herring to just talk about the blockchain technology. We need to be talking about what actually is going on in these markets. And so I don't think there's any reason to put whatever we're going to call it, whether it's an investment, a currency, some product of value, it doesn't matter what technology undergirds it. What matters is the risks presented by this. And there's nothing about the blockchain that diminishes these risks like any of the other sort of models that we had previously. That is not something that fundamentally changes the things that regulations are meant to combat.
Why discuss your skepticism that technology alone, like Facebook, Libra, or cryptocurrencies, can address unequal access?
Yeah, I mean, the problems of the unbanked, like I said, are not technological problems, they're policy problems. We have the technology to provide an ATM and a debit card to people. This is what the most popular product for unbanked communities is a debit card. What they need to do is to take their cash and their paychecks to cash it someplace, right? So they need a safe and secure place to store their money, and usually people want something old and dusty like a bank as opposed to some new startup to invest all their life savings in. Okay, so they need somewhere to save their money. They need a way to engage in digital commerce. So we have all of these banking deserts, especially in rural places, and all we need to do is allow some access for that point of contact cash digital. And none of these cryptocurrencies can do that until there is wide scale adoption, and this currency would be acceptable by every single point node that these people are using these payments. And that's just, it may happen, but there's many easier ways to do it.
You compare cryptocurrencies in some ways with going back to the gold standard. Some at the Feds have commented on that. Why is that a problem?
Well, like Mr. Allaire said, his company is a minority in this field. Most of it wants to rewrite monetary policy and go back to relitigate those debates about whether fiat currency is a good idea. Our Federal Reserve has a charter to create elastic currency. That is a debate that we have litigated in this Congress. And if we want to relitigate the merits of gold versus fiat, this would be the place to do it, not at some startup. And so what's happening in the Bitcoin and the cryptocurrency market is a lot of these companies just want to create an alternative to the U.S. currency, to the U.S. dollar. And I understand their frustrations. I can't imagine this body would want to delegate that money-making authority to the private market.
Thank you, Mr. Chairman. I'll just close. Your comments about the Federal Reserve, I think, ring true that they have the authority and the ability to modernize our payment system, and I'm worried that if they don't move quickly, Facebook or Wall Street or some tech company will use it to squeeze more profits from hardworking families and community banks, and will break that critical public infrastructure. So thanks for your comments.
Thank you.
Thank you. Senator Warner.
Thank you, Mr. Chairman. I want to say I really appreciate the fact that you and Ranking Member Brown have had this second hearing on this issue. I think it's really important. I do think blockchain, distributed ledger technology, as the professor indicated, Mr. Allaire indicated, has great potential. I am a little intrigued that we're basically 10 years almost into this, and even in countries that have not had the kind of regulatory oversight we've had, we've not really seen a full breakout. And I'd like to get to that at some point. I want to start, though, with the professor. One of the things that Mr. Marcus from Facebook said at the previous hearing, that if we're going to go with Libra, there was going to, in a sense, be a one-to-one relationship. To me, that does sound a little bit like gold standard. And what would be the effect if this were to become a extraordinarily popular currency? How could this association, the Libra Association, acquire and hold on to enough assets to be able to allow that one-to-one? And I'd love to have a brief comment from everybody on this.
It does seem like the gold standard or like the money markets, but one of the things that differentiates us is every time we in the United States have had a gold standard, it was still backed to money created by the government. So we've never had a pure gold standard. And this is what Libra would advise. And so you'd have this bucket of currencies that would be worldwide. So what happens if everyone in Greece all of a sudden invests in Libra? That would sort of destabilize the U.S. dollar. So if we're going to have a basket of currencies and no sort of central issuer, there are potential problems. I'm not saying they can't be solved.
But wouldn't you also have to have, in a sense, enough basket of currencies that would be available on almost a as-needed basis?
Yes.
And again, if you're talking not millions or billions, but hundreds of billions or trillions potentially, Mr. Allaire, do you think that really is what Marcus meant, that there would be a literal one-to-one?
Yes, thank you, Senator. My understanding is that, yes, it is a one-to-one based on a mixture of reserve currencies that they would ultimately specify. I would like to comment on this particular topic. I think it's critical, which is, the first wave of these private monies, like Bitcoin, decentralized private monies, were very much focused on establishing a global digital currency with a very specific monetary policy ideology. And those will continue to grow and very likely flourish to the degree that people are interested in pursuing that form of store of value. However, the critical mainstream use cases for the financial services sector built on blockchains has really required the development of what we refer to and the industry refers to as these stable value tokens or stable coins, Libra being an example of that. But these have been around for a number of years. And 2 years ago, with one of the other leading companies in the industry, Coinbase, we created a consortium to develop an open standard for stable value currencies to work on blockchains. And we launched in Q4 of last year the US dollar coin, which is not a basket, it's US dollar coin. And it's a one-for-one backing model as well.
I still don't understand how you fully aggregate that one-to-one backing, but I want to get to a couple more questions quickly. One is, if the Libra approach has got a basket of currencies, don't you have currency risk there? And if you've got currency risk, shouldn't there be, again, some additional, at least, information in terms of consumer protections?
Absolutely. I mean, there's currency risk, and there's also the same risk that the shadow banking market created, right? So the commercial paper markets and the repo markets and the money markets, these were all dollar-denominated currencies. They weren't new currencies, but there was new money and value creation in a different format. And this is exactly what we have here. And not to say that this, they wouldn't have 100% reserves, just to say that what's the point, right? We have U.S. dollars. If we want more of them, the Fed could do that.
It also seems to me a little bit, if you have 100% reserves, where's Libra going to make money on this if you've got if you've got that maintenance of that backstop all the time? Mr. Laurie, I got only a few seconds left. I mean, I'm open on this question around tokens vis-a-vis securities. You've said there ought to be a new framework, a new structure. Where would you put the regulatory authority in the United States if you were to be able to wave that magic wand?
Sure. My recommendation would be the development of a national policy on digital assets, definitions of digital assets, specific rules and exemptions around those, and have a single supervisor over the firms that are regulated.
I know that's easy to say that, but you didn't answer my question. Would you create a whole new regulatory system for digital assets? Or are you going to pick, and I've run out of time, the chairman's giving me a second. Where would you place this within our existing regulatory structure, or would you create something brand new?
It's a very good question, Senator. I am certainly not an expert on the efficacies of the different regulatory agencies, financial regulatory agencies, and how to best organize those.
Thank you. I do think that the question about why there's not been a breakout beyond digital currency is something that I'd love to get an answer to as well. Thank you.
Thank you, Senator Schatz.
Thank you, Mr. Chairman. Thank you to the testifiers. Professor Baradaran, I want to ask you about the federal law that says that only the government can mint a coin. And of course, the reason it was written that way is because that was the only way that it could be conceived that an entity could create a currency. And so the basic question is, knowing that, okay, only the government can mint a coin, but these people are trying to do something that sort of rhymes with that, although it seems to comply with the statutory language, which is old. What do we do now?
Yeah, so I do want to differentiate that not all, like Mr. Lair said, not all cryptocurrencies want to establish new alternative currencies, but certainly the majority of the market, which is Bitcoin, does. And we do have laws against this. And I want to be clear that we created these laws because we had problems. We have had problems of private, issuance of coins. The UK had the Stamp Act before that. So we've experienced what it's like to have alternative currencies, and we have purposefully put that power in the federal government.
Mr. Allaire, I want to see if I can find an area of agreement between you and the professor, but I don't have a lot of time. So here's the thing. It sounds like you think this will democratize the use of financial products. But I'm sort of stuck on what she said and tend to agree with what she said, which is to say that there is a much more straightforward way to do that. There are public policy proposals all the time. There are things that our regulators could do under existing statute to democratize the process and to decentralize the process. And so what I'm trying to get at is, do you really think that in a society in which only 81% of the public currently has a smartphone, that we're anywhere close to democratizing the use of these products? I mean, what it sounds like to me is tech people wanting to wave a wand and skip a bunch of steps and avoid the tough politics of doing things for people and saying, we've got a new tech that will solve all this stuff. So I'm just wondering whether you want to speak to the limitations societally of what you're doing. I don't doubt the importance of the technology or that we'll probably all be using it in 2 decades, but I think that that's a different assertion than, oh, and by the way, it's going to solve all these other societal ills. Go ahead.
Well, first, I think the motivations for founding this company in particular circle, and I think a lot of the entrepreneurs, computer scientists, economists, cryptographers, and others that work in this field is not focused on financial wizardry and how to, get rich quick. There is certainly a fair share of that. It's focused on how do we build a new global infrastructure for economic activity.
Okay, but what do you do about, just as a start, 19% of the American public doesn't have access to the device that you would use to execute a transaction. And what do you do about the fact that adoption is nowhere near universal? Are we just sort of supposed to place our bet on this tech as solving a bunch of problems and leaping over all the existing ones?
No, I don't think so at all. I think, first of all, these technologies develop over time. In 1998, while the internet existed, but no one had broadband access. The internet, personal computers were relatively new in terms of their adoption. Should we not have focused on innovating and building the cloud infrastructure, higher speed internet connections, come up with policies that encourage broadband adoption? Should we not have made those investments and policy choices?
No, but so since you're asking a question, let me answer the question. The important thing here is to understand what this tech does and what it doesn't do. Because if we're going to establish a regulatory framework for this tech, we need to not be so triumphant about all the problems that it's going to solve, but we also have to be clear-eyed about the problems it may create, but also the potential for it. And so when tech executives and their funders talk as though all of societal ills will be solved by a new code, you will forgive us if we're a little bit skeptical about all of that. I don't doubt the potential for this tech. I just don't think it's actually going to bank low-income communities, and I don't think you've persuaded anybody here that it's going to do so.
So there is no silver bullet from technology. Very clearly. These are human issues, and they're real policy issues. I think the risks that we have to address in the financial system, whether it's access, criminal abuse, data security, privacy, those exist significantly. This technology actually does provide an avenue to improve upon those, but there's no silver bullet here. This is people who have to build and innovate and collaborate with policymakers.
And I'll take the professor's answer for the record, if you don't mind. Thank you.
Thank you. Senator Cortez Masto.
Thank you. Thank you, Chairman Crapo and Ranking Member Brown, for this important discussion. And thank you all for being here. Let me follow up on that, and let me start with you, Mr. Allaire. I do think that blockchain technology, there's potential for it. It is the future. It's a platform that has the ability to transform so many sectors of this country, from what we are talking right now, the financial sector, to the energy sector, right, to healthcare records, to everything. I think there's potential here, and it's not going to go away. It is something we have to address, because if we as a country do not lead in this technology, China or some other country is going to do so. So, Mr. Allaire, let me talk to you about this, because you talked about defining digital assets. When you're talking about that, are you only talking about it as it pertains to the financial sector, or are you looking at other potential areas where blockchain can be used in our economy?
So, thank you, Senator. In my written testimony, I talk about this category of digital assets, which are often called, tokens or tokenized digital assets.
So that's just as it refers to cryptocurrency, some sort of currency?
It is not necessarily. So
Okay.
you may have a token that represents votes. You may have tokens that are, associated with healthcare records, as you said. The breakthrough here is that we have a public, secure, tamper-proof infrastructure that's evolving and emerging for record keeping and processing of data that is more resilient and ultimately more private than some of the infrastructures that we have today. And that can be applied in many industries in many significant ways. A lot of the innovations that are happening with these digital assets that are built on blockchains may have some fundamental utility within an industry, a business, a product, a service. But that digital asset also may be associated with some financial characteristic. And the coupling of the utility and financial characteristics is part of what makes these innovative. And it's the definitions there that I think really need to be more clearly defined in the United States in particular, in order for businesses who want to build on this to be able to innovate and issue new types of digital tokens that can be applied very, very broadly in many, many industries.
Thank you. And so, Professor, would you disagree with that? And is your concern more on the financial sector piece of it?
Yes. My concern is on the digital asset side. Not the blockchain is neutral technology. It can be used, like Mr. Allaire said, in voting and all these other things. I do want to point out, though, that the blockchain has potential to be more secure and reliable. So far, it has not been. It has been hackable. There have been security issues. I think there's a lot of potential, and it's been 10 years and billions of dollars of venture capital, and I still don't think it's better than some of the payment systems that we currently have, though it could be.
Okay. So when you talk about, and let's go back to the unbanked, because in Nevada we have the highest rate of underbanked adults in the state, in our state, as opposed to the rest of the country. But can you do me a favor, and can you expand on why you think new digital currencies will not meet the banking needs of rural and low-income residents that are not well served by our current banking system?
Yeah, I mean, the problems of low-income and underbanked customers is not that they are unsatisfied with the current technology being offered to them. The problem is that they live in banking deserts where there is no place for them to take their cash. In Nevada is a huge cash-based economy. Where do you take your cash to put it into a savings account that would then give you a debit card that you can use in e-commerce? There is no place to do that because of a variety of reasons, but mainly because banks have no longer are interested in serving those customers. And so how does any technology, any digital-based currency help when people are operating in cash? Now, do we need to get people off cash? Absolutely. How do we do that? I mean, this blockchain conversation is 4 or 5 steps ahead of where we need to start, which is how do we get ATMs that don't charge $8 per person?
And I was just going to say, so the answer might be looking at why there is a charge of a fee for an ATM, or why you have to have a minimum balance of $1,500 or more in a bank account before you can even open a bank account.
Yeah, and this is where I truly am grateful for this industry for bringing attention to these things, because really there are problems with our payment system. I'm not trying to defend them to say that they're perfect and we should use them. There are huge problems, accessibility issues, they're slow, they're inefficient, etc. But they have a public mission, and we can fix them, and we should fix them, as opposed to sort of outsourcing it to the tech sector.
Thank you. Appreciate that.
Senator Van Hollen.
Thank you, Mr. Chairman and Ranking Member Brown, and thank all of you for your testimony. I've been trying to listen from the TV monitors, and I want to thank all of you for your testimony, and I appreciate the series of hearings we've had on the subject of cryptocurrencies and new technologies, but I was listening to you, Ms. Badradharan, talk about the importance of planning for these technologies, but also the need right now to move to a real-time payment system, because our failure to have moved forward with this technology, as so many other countries have already done, is costing millions of Americans billions of dollars every day, right?
Absolutely.
Yeah. And, Mr. Chairman, I hate to sound like a broken record on this whenever the Fed chairman or other members are here. I urge them to move forward right away on building out that faster payment system. I hope that they will make a decision soon. Let me just, if I could, Mr. Chairman, put in the record an article, and the headline, this is a Post article from a little while ago, headline, "A former bank CEO named his boat, quote, overdraft, now that the bank is in hot water over the fees." The point is that for people who are living paycheck to paycheck, the inability to access their funds in real time is costing them a huge amount of money in fees and overdraft. Could you, Professor, just again elaborate on what it's costing the public right now and how we have it within our power right away to move forward on this front?
Yes, and if we're worried about the U.S. lagging behind, this is a huge area where we are lagging behind other countries. In the bill that you introduced, real-time processing is essential. So if you don't have a buffer of wealth, if you don't have a big bank account, you need to spend your paycheck as soon as you get it. And this is why people go to check cashers. They'd rather pay 10% of their paycheck just to be able to use it to pay the rent and buy their groceries. Instead, if they go to a bank, they put their paycheck in, and 3 to 5 days later, or 3 to 5 business days later, they would have to go back to the bank to be able to get that. That is a main reason a lot of people don't use bank accounts. And so what does it cost them? Well, not just the check cashing fees, but the money sucked out of their accounts with these fees also makes them rely on payday loans. And there, of course, you've got 300% APR and just more wealth being sucked out. These are really simple problems. And I think part of being poor is that there are a lot of problems that other people don't realize that you have. And I think we need to have a little bit more compassion about what it's like to not have that much money and how we can make their lives better.
Well, thank you. As you mentioned, Senator Warren and I and others have introduced legislation to move forward in this area, but really the Fed has it within its power and authority to do this right away. Can you just talk a little bit about how they have that authority and your view that they should move forward immediately to catch up with many of our global competitors?
Yes, they have the authority. I mean, they say that they're studying it. I don't know how high on the priority list it is, but I think it should be. As the Brookings Institute pointed out, the low-income people are sort of spending billions of dollars in overdraft fees. We could actually just put that money back in their pockets through adopting this very simple technology. And yes, I think the Fed should definitely do it.
I appreciate that, Mr. Chairman. I'd also like to put in the record another article from FinTech entitled "Go Slow on Libra, Speed Up on Faster Payments."
Without objection.
Thank you. It makes the point that some of us have been trying to make, which is that the Fed, again, could do this now and really provide relief and put billions of dollars back into the pockets of working people. And I hope they'll move forward quickly. In the meantime, we will continue to push for our legislation. Thank you.
Thank you, Senator. Senator Tester.
Thank you, Mr. Chairman. Thank you, Mr. Brown. Thank you, or Ranking Member Brown. Thank you, folks who are testifying. Dr. Nelson, I guess the first question for you is do you believe that, do you agree that cryptocurrencies are leaving the U.S.?
Sure. It's certain that other jurisdictions are sort of out ahead of the United States and trying to become cryptocurrency hubs.
Okay.
Yeah.
And so do you think that they're leaving because they're looking for a safe haven to avoid regulation, or is there another reason?
Some of the cryptocurrency hubs are actually using regulation as a way to attract cryptocurrencies to their borders. It's not a...
So increased regulation.
Well, not necessarily increased regulation, but perhaps clarity over regulation, that by giving regulatory certainty to consumers and businesses in the cryptocurrency market, they're getting out in front on that and attracting cryptocurrencies to their jurisdictions.
So one of the things that was brought up, and it's been referenced several times on the hearing with Facebook, but one of the things that is of concern, I think, with you and others is how do you prevent bad actors from laundering money that are financing terrorist activities or whatever? Any ideas in that vein?
Sure. Money laundering is a huge concern for cryptocurrencies. countries around the world are looking at their money laundering regulations and how to address cryptocurrencies. Even the cryptocurrency hubs like Switzerland have money laundering regulations. They're working
Yeah.
to make those more robust. The Financial Action Task Force at
Do
the
you
international
believe they
level.
could be, you believe those regulations could apply to cryptocurrency and have them work?
And have them work? Well, I think money laundering continues to be an issue. Financial Action Task Force is trying to update its regulations to
Right.
get in front of the technology. I think it's a continuing concern.
So the question is that, is there a way to put a regulatory design in place that will discourage money laundering with cryptocurrencies?
I think some of the licensing and reporting requirements, transparency requirements can help address some of these concerns.
Okay. The Facebook fellow who was here I asked him a question about what happens if the accounts get breached. The same way my credit card, it has happened on occasion, and it hasn't cost me any money. The banks have taken care of it, thank God. And I think it may have happened, it happens to everybody at some point in time through no fault of their own, I might add. So the same thing could be applied here, and his response to that is that they have a one-to-one backup on the dollars. I don't know if you watched that hearing or not. You did. And any of you can respond to that. That seemed to me to be, that's incredible to have a one-to-one leverage. Do you think that's real?
I think one of the concerns about the Libra is how the reserve assets would function. They pledge to have safe assets today, but what's a safe asset today may be less safe tomorrow. So even if it's backed on a one-to-one ratio,
Right.
will that always be true in a safe asset? And then what happens if there's a run on Libra, if it is being used as a global currency used by billions of people?
So and you can answer this too, Professor, if you'd like. Go ahead.
It is, there's what Facebook sometimes states it's going to do, and then what they end up doing, and then, oops, sorry, we were going to do that thing, and we accidentally didn't.
Would it kill cryptocurrency if in the laws that we are probably going to be passing, because I don't think we're going to leave it entirely up to the regulators, since they brought it up, if we stipulated that there had to be a one-to-one?
Cryptocurrencies, like we said before, there's a variety. I mean, if you're just talking about cryptocurrencies, they actually are trying to be alternative currency, so they're not worried about one-to-one.
Okay, let's talk about the Libra and specifically, because that, and look, I'm not an expert in this field at all, but it appears to me that they're trying to take the dollar, because you can buy them with the dollar, and then make a transaction across country lines. In that kind of a scenario, which is what I interpret them to be offering up, would a one-to-one be something that we could require without putting them out of business? Or would that be good, prudent fiscal responsibility?
I mean, I think we still are unsure one-to-one to what. It's not just dollars; it's a basket of currencies. So, what is that other one?
So, in Libra's case, one-to-one to every Libra, they've got the equivalent dollar amount behind it. I take it what you're saying is there's ways to game the system if they want to game it, regardless of what we say.
And as we say in law, I mean, definitions are tricky. You can define something as a one-to-one, but what does that mean? One-to-one to what? Right?
Yeah, okay. Well, I appreciate you all being here. I would just say that I think this is coming, and we have to be ready for it. And I think that all three of you can be an incredible resource to us as we figure out how we're going to deal with it. Thank you, Mr. Chairman.
Thank you, Senator. I'll go to another round of questioning, and I want to start my questions this time with you, Dr. Nelson. In your report, you described the different approaches that different governments have had to cryptocurrency. What are some of the key attributes of countries whose regulatory frameworks are considered more accommodative? And how do they approach issues relating to money laundering and the other types of issues that we're talking about here?
Sure. Some of the countries that are trying to build themselves as cryptocurrency hubs are really trying to adopt clear regulations at the outset on how cryptocurrencies are going to operate. This is to give regulatory certainty to consumers and businesses who want to use cryptocurrency regulations. That said, some of the regulations have been described as more favorable to cryptocurrency industries. So, for example, in Switzerland, they have regulations for money laundering addressing cryptocurrency. They have provided guidance on how ICOs should be treated as in regards to securities regulations. They provide guidance on what kind of licenses cryptocurrency industries need to operate within Switzerland. So it's not that these countries are trying to shirk regulations. They're trying to provide certainty while also balancing innovation to encourage the adoption of cryptocurrency.
So it's not so much that they're trying to create the Wild West, so to speak, and invite folks to come there because there's not really significant regulation. It's that they are providing clarity. And, well, maybe, Mr. Earlier, you could address that.
Sure. As we looked at the ongoing expansion in our international business and operations, it was very clear to us that for our non-U.S. business, the U.S. regulations are the U.S. regulations, and what we do here is exactly what the law stipulates. But outside the U.S., there are opportunities for digital assets and blockchains that are larger. And so we spent time to look at all the different jurisdictions, and the things that we were focused on as a firm were we wanted there to be an actual high bar from a regulatory perspective, meaning that there needed to be significant, serious firms where fundamental risks were being supervised, enterprise risks, cybersecurity risk, financial crime risk, anti-money laundering risk, and most critically, in the case of digital assets, custody risk, the protection of these assets from theft, having the appropriate insurance around them, but also clear definitions. And I think this gets to what one of the other panelists has said, and I've said as well, which is very clear definitions about what constitutes a token or a digital asset to provide that kind of clarity to businesses that want to operate there. Whereas I think in some other jurisdictions, including the United States, there's an incredible gray area. It makes it very difficult for businesses to know where they stand and where to operate. So those are some of the things that we considered and have found in other jurisdictions.
So I want to get into data privacy, and I may have to do that after Senator Brown takes another round. But in the last couple of minutes that I have here, help me understand if a digital currency is to become global, like Libra seeks to do, how does it do that? How does it get global acceptance if it faces 190 different countries with different jurisdictional issues and different regulatory systems? And maybe another way to ask my question is, if the United States were to decide, and I'm not saying that it should, but if the United States were to decide we didn't want cryptocurrency to happen in the United States and tried to ban it, I'm pretty confident we couldn't succeed in doing that because this is a global innovation. But how would a company that wants to create a cryptocurrency that has global reach get into the United States, or how would that impact the United States? You see the question I'm asking?
I'm happy to take part of that, Senator. I think the challenge that we all face with this is, some of these cryptocurrencies they're literally just a piece of open source software. There's nothing else. It exists on the internet. It's open source software. Anyone can implement it. It runs anywhere the internet runs. And these have a monetary policy where these assets are algorithmically generated, and they exist everywhere the internet exists. They will soon exist, interstellar. They will exist, again, anywhere the internet exists. That is a challenge that every government in the world now faces, that money, digital money, will move frictionlessly everywhere in the world at the speed of the internet, hopefully with a high level of security and data protection around it. One of the promises of this technology very specifically is a higher standard around privacy, a higher standard around confidential transactions and data protection. That's one of the core infrastructure focuses of these blockchains. And so I think those needs can be met. there's the flip side, which is how does law enforcement get its job done, and how do 190 countries get an agreement about that? FATF guidelines, for example, that are specific to virtual assets have come into place, which I think could be a roadmap to that as well.
I'll have to ask Professor Barater and Dr. Nelson to either answer. If I can get to another round, maybe I will. We can answer that question then. But Senator Brown?
Thanks. Professor Barater and I want to have a series of questions for you. Mr. Allaire said that he didn't really know who should regulate digital assets, and Facebook essentially said that 2 weeks ago. Let me ask you a series of mostly yes and no questions. Do we already have rules and regulations for currency?
Yes.
Do we have rules and regulations for securities?
Yes.
And do we have rules and regulations for payday loans?
Yes.
Sort of.
Sort of.
Have rules and regulations for exchange-traded funds?
Yes.
Are there any new financial products that have been invented that we've never seen before? Are we talking about financial products that already existed but now run on blockchain?
Yes. I think these are not new.
You can expand on that, surely.
These are, the technology is new, but the sort of essence of the product is something that we've seen before.
So if there aren't really new products, why would we need new rules and new regulations?
I mean, I think it's important to have clarity. It's very important for people to understand what it is. I don't think we have to reinvent the wheel on any of this stuff. I think we have clarity in each of the jurisdictions. So to the extent a digital asset hits the currency model or the securities model, we've already sort of debated those models, and we can enforce those rules.
Are you concerned that tech companies seem to be pretty strongly resistant to rules and regulations?
I think there's a lot of faith that some of the problems that we as a society face are solved by tech, and I think sometimes there is a naivety on the part of some of these tech founders in what tech can accomplish and what is better for public institutions. And so I think sometimes tech is great and can solve a lot of problems. I mean, he used the internet before, and I think no one's saying ban blockchain, no one's saying ban these digital currencies. All we're saying is let's just protect people in the ways that regulations are meant to protect them. So if we had said in the early days of the internet, look, internet is going to take over education soon, so let's just not worry about fixing public schools and the internet will educate the young, right? I mean, so I think it's essentially that. We still have these public institutions that are doing it, and we don't go around them just because we have a new, potentially revolutionary technology.
Does the resistance of big tech companies' resistance to regulation, does it remind you of resistance by big banks to regulation? Are there similarities there?
There are similarities there, yes.
What does that tell you?
I mean, I just think we need to be cautious. I think we need to be, again, innovators dream big, and regulators just need to also imagine bad scenarios. I think we as regulators and Congress people don't need to just swallow it wholesale. It's good that we have innovators and entrepreneurs that have really beautiful visions of the future, and I hope that they're right. But it's also good to have a counterpoint to that, where regulators say, "Hey, what could go wrong here?" and to try to imagine those scenarios too.
I've said a number of times in this committee that many of my colleagues seem to have, maybe we all do to a degree, a collective amnesia about what happened to our financial system 10 years ago. What lessons do we learn from weakening regulations in the banking sector a decade plus ago? What lessons do we apply to tech companies here?
I think one of the things that keeps being said is, we're going to lose, the U.S. is going to lose its, leadership worldwide if we don't let these companies do whatever they want. And I think that is not, we can't compare the U.S. economic system to Malta or Bermuda or to Venezuela or even China. We have the strongest currency worldwide for a reason. We have great technology companies for a reason. We've got a very, very strong and healthy sector, not not to say that it's perfect, just to say that, to say, we're all going to leave to Malta, I don't think that should make regulators think that, okay, well.
Don't skeptics of your view say that the reason we have such strong innovation is because government gets out of the way and lets big tech or lets Wall Street invent new products and do what they want?
I think we said that until the financial crisis, and then we have $1 trillion bailout, and the Fed is left holding the bag. And so I think we just, we say that on the front end, let them do it, but let's remember what happens when we sort of don't regulate those things that matter. And it's not just all technology. Not all technology is similarly risk-inducing. I mean, again, the internet and email, all of these things, we keep comparing blockchain to these things, but it's very different in a lot of ways, or specifically digital assets on the blockchain. We're talking about trading and markets and finance. We're not talking about just neutral tech here.
Thanks. Thank you, Mike.
Thank you, Senator Brown. I have a few more questions. As I indicated, I'd like to get into the data privacy issue a little bit here. As I'm sure you know, Senator Brown and I together have jointly expressed serious concerns over the collection of data on individuals and the phenomenal explosive growth of that collection and then use of data that happens without individuals usually knowing that it's happening or when it's happening or knowing what has been collected on them or how it is being used. And each of you could respond to this if you would like to, will this new technological innovation that we're seeing into digital currencies and blockchain technologies give us an ability to meaningfully enhance individuals' privacy rights and protections? And if so, kind of explain how so.
Be happy to start. Thank you, Senator. I've addressed this somewhat in my written testimony as well. If you step back for a moment and you look at these public blockchain infrastructures that are being built, they're designed in a way to provide a global, open record-keeping system that is highly secure, that is very tamper-resistant, and which can work in a kind of interoperable way all around the world. One of the killer apps, if you will, that is being explored to build on top of these. And there are many, many projects, startups, companies, governments even, that are working on this, is the development of essentially new standards for what is often referred to as self-sovereign digital identity. The ability to have a digital identity where you as an individual have self-sovereignty over who can access attributes of your digital identity, how they can access it, the ability to provably demonstrate something to someone, say someone needs to know your age in order to conduct a transaction without having to disclose to them your address or other information. So the ability to have much more fine-grained, selective ways to attest through attestation methods, to attest to who you are or what you do without actually having to transmit all of that sensitive personal information. The data breaches that we have today, the massive privacy violations that happen continually on centralized internet services, those are the core issues that blockchain infrastructure is being designed to try and address. So it's one of the areas I'm most hopeful. And when you couple that kind of digital identity model with global digital currencies, you actually can imagine a financial system that both preserves privacy, provides mechanisms that are still highly useful to law enforcement to pursue the bad guys, but keeps people in control. And so I think those things are very much becoming possible in front of us. There are still needed policies around that, around who can add elements to these digital identities and how they're accessed and reporting and other things. So there's absolutely the need for very clear laws and policies. But it is a technical breakthrough that is emerging that could solve some of these issues.
So before I go to Dr. Nelson and Professor Baradaran, going beyond financial transactions, could this innovation or technology that you are talking about, could that be used outside financial transactions? For example, somebody surfing on the web or looking to buy a washing machine on the web and having their identity grabbed or having their search identified and then utilized in artificial intelligence to manipulate them?
It could be applied. It could be applied in putting people in more control over who's accessing their data and how when they're interacting with any digital service, not just financial services. So it's applicable very broadly.
All right, Dr. Nelson or Professor, would either of you like to?
Sure. I would just add that Facebook has totally changed the debate about privacy and cryptocurrencies. We used to focus with cryptocurrencies on whether they gave users too much privacy and that it allowed bad actors to engage in nefarious activities. Now with Facebook's Libra, the concerns about whether users of cryptocurrencies will have enough privacy and the potential for economic transaction data to be merged with other data about users on the internet, including other Facebook platforms. And this issue then ties into the differences in regulatory approaches taken by countries around the world. Countries regulate privacy differently, and so if you have a global currency with different regulatory approaches relating to privacy, this may be something that regulators really want to address and get in front of.
Thank you. Professor?
Yeah, I was going to say, there's two different kinds of privacy. There's, do we want to privately buy drugs, child porn, or send money to terrorists? No, and we have laws for that, right? So we don't want that kind of privacy. But we also want the privacy of, Facebook not using algorithms and data to target me, knowing, oh, she's sad and doesn't have enough money in her bank account, so I'm going to give her a payday loan when I know that she's going to take it up. That's the kind of privacy where it's not individually. Maybe they don't know me personally, but they know the type of person I am and what kind of mistake I would make. And so those are the kinds of things. They're two very different types of things. And like she said, Facebook presents a kind of a different problem than Bitcoin, which is popular for people who want to buy illicit and extra legal drugs. And this is why you see Venezuela, Iran, and other countries with sanctions, wanting to evade them using these platforms.
Anybody want to add anything else to that? Well, there are obviously tons of questions here. I have a lot more myself, and as we move forward, I'm sure that we'll be communicating with you to get your advice. We appreciate you all coming today and sharing your information and expertise with us. This is obviously a very critical issue. As I said at the outset, I want the United States to stay at the forefront of essentially engaging in and hosting and managing and regulating this new creative technology and the innovation that will flow from it. I do believe that it has some incredible potential that can be utilized for good. And it does have incredible risk that can be utilized for bad, and we just need to get a handle on that. I appreciate your coming here today to help us out on that. With that, this hearing is adjourned.